Hello, everybody. This is Troy. I'll be leading the webinar today. I'm a senior account manager with AvaTrade. Before we get going, let's just do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing the first slide there on the presentation. It says technical analysis. Okay, I've got enough responses. Thank you. We obviously are up and running just fine. So interesting day today. We've got the World Economic Meeting going on there in Davos. We've got fear about a virus coming out of China potentially, and so some big swings up and down, which really has been nice for technical trading. So we're on the right topic today. For timing with a technical analysis webinar, I'll show you some movements that have been tremendous and some entry points, unless they've already bounced, that we're looking to be primed for opportunistic entry points as we're coming into the webinar. So first, let's take a look. Obviously, as we always go over, all investments have risk. There's no one investment that's guaranteed to profit. That holds true with Forex trading, options trading, spread betting, CFD trading. No one move is guaranteed to profit, but obviously you risk manage in a way that makes sense. We're all here because there certainly is the potential for tremendous profits if you set things up the right way and you got a strategy that's working for you. Almost a third of traders, as you see on the slide there, with AvaTrade profit in the long term. And there's no reason why you can't be part of that 29% or 30% of traders. And there's no reason why we can't grow that as a company either. AvaTrade's a hedging broker. We don't bank on our traders losing or something. We count on spreads and overnight interest rates. We want a fair marketplace with people growing their accounts and doing a lot of trading. And if we need to hedge outside because everyone's trading in the same direction, we do that as a company and go with our clients with hedge trading if we need to. What we'd like to see is that 71% flipped and have that the percent of successful traders rather than the percent of those that end up gradually losing their funds to the spreads and not having a successful long-term strategy. But those of you that are here taking it seriously, learning, there's no reason why you can't have long-term success like those 3 or so out of 10 that right now are able to have long-term success with AvaTrade in terms of profits. So as we go forward, also keep in mind what we cover is meant to be educational in nature. It is not meant to be financial advisement, but certainly the information as you add it to your tool belt, so to speak, with more and more ways of looking at things and building strategies, you certainly have the opportunity to become more successful with your trading. So as we go forward, keep in mind there are a couple of different types of technical analysis. We tend to lean more heavily on the manual methods of technical analysis in the webinars because it gives you more flexibility to set things up based on information that you know in real time. Indicators are another way of doing technical analysis. They kind of do the digging for you, so to speak, tend to be purely based on the historical movements on the chart and can't typically take into account any fundamental news or preference of direction, which is why I kind of shy away from too many indicators in the webinars. But both are considered technical analysis. At any point, if you have any questions, please ask. As we're going on the live charts, as we're looking at the news stories that are coming in, helping to drive the direction of the movements, any input, any questions are welcomed as we go along. So with no further delay, let's take a look at what's happening in the news. This was nice for the pound today. This came out a while ago. Britain wants friendly relationship with EU in the future. That's nice that there's some warming between the two sides with Great Britain and the European Union as this whole Brexit thing is going through. So I think that was viewed quite positively today. We'll look at the charts, we'll look at the technical analysis and see what happened and what you might still be able to do to take advantage of what seems to be positive momentum on the pound. Now, what else you can see with the pound, look at the announcements today. Okay, claimant count change, better than expected, much better than expected. So less people filing for unemployment claims. We've got higher than expected average earnings in Great Britain. The unemployment rate came in at 3.8% as expected. So the news came in and the employment change, increase in hiring more than expected. So nothing but good news coming out of Great Britain with the economic announcements. And so we're going to look at some charts, Donovan, soon. Okay, you'll see it on my screen. Good question. Okay, so, and you can have your live account, your demo account, whatever you want, you can have open as well. If you plan to make some trades or make some moves, not based on what I think, but based on what you think from what we're covering. Okay, so obviously, what do you think this does for the pound? All of this information coming in, nothing negative, either as expected or better than expected on 1, 2, 3, 4, 5 announcements for the pound. Yeah, probably makes it go up. And then you take a look at the first thing we looked at. This seems to be positive news as well. Okay, so all of this has been going on all afternoon. It's not like you had to be exactly there on the minute. You could have been trading on the pound for the last 3 or 4 hours based on this information and been able to take advantage of it. Okay, and then we take a look at some other information coming in. Okay, China virus sends shivers through markets as risks mount. This is Reuters. Okay, there's some real fear about this. They're comparing it to the SARS virus from back in 2002, 2003, where hundreds of people died. Okay, and it's travel season with the Lunar New Year. I guess this is a big time for travel with some areas of the world, particularly China. And this is where there's an outbreak with a new virus that they're not sure exactly what it is, but it's not good. Okay, so there's actually a lot of fear on the markets because if you think about it, if travel becomes restricted, it can restrict business activities and all kinds of things. And China's a major economy in the world. So this is being viewed with a lot of fear on the markets. And it's not just Reuters. We can take a look. Same thing. This is investing.com. Wall Street to slip. Now, this is a prediction in the headline. They didn't say Wall Street slips. They said Wall Street to slip after long weekend on virus fears. Okay, they're talking about we trade on the futures on the NASDAQ, S&P 500, Dow Jones, so it's already dropping on the futures. We'll take a look. And when the market opens in the U.S. and the non-futures trading starts, a lot of times that gets a further surge in the movement on the futures. Okay, which continue to trade all day. So this is something to keep an eye on. What's very interesting, look at the futures. In the red, they're expecting the actual market when it opens to go down. They're predicting that in this headline on investing.com. And then what's the VIX index? Does anyone know? When that's going up, what does that mean? When the VIX index is climbing? What's the slang term for the VIX index? There's two slang terms that I've heard used: the volatility index and the fear index. Up over 6.5%. That's really huge. That's a big climb in the fear index / volatility index, up over 6.5%. So what does gold do many times when there's fear? Just like this volatility index, what does gold typically do? Up. So what if we catch gold at a low point? It was actually dropping earlier today. Okay, it's dropped to some support levels. So we'll take a look at that. So now that we understand what's happening in the markets, okay, the markets are turning from yesterday's green here to the futures in the red. And we see the fear index up over 6.5%. That's huge. Okay, so what do you think's happening with oil? Before we look, what do you think's happening with oil? Huge fear on the markets, fear index rising, futures index is dropping. What do you think's happening with oil? What happens to oil if there's economic fear? Less demand from from struggling economies means typically oil drops. Okay? Not always, but typically that's what we see. Unless the fear is because of war in the Middle East, that would drive oil price up, right? If the fear is because of economic concern, that tends to cause oil to drop. So you have to look and say, wow, lots of fear, and say, what's the fear caused by? Oh, economic concern. Okay. Then probably oil's dropping. Okay. So now let's look for some technical entry points. Before we move to the charts, just type OK if you're still with me. Want to make sure the audio is still running. Everybody's all right. Okay, good. All right. Any questions? Just let me know. Sometimes if I don't see questions come in, I wonder if maybe you're not hearing me. But maybe I'm just explaining it so clearly there are no questions, which is a good thing. Okay, so I'm looking here at USD JPY. Look at this resistance point, and this was, an hour ago. I was wanting the webinar to start to show you this. USD was climbing against the yen. What is the yen considered? What kind of currency? Just like gold, the yen is a what? Safe haven. So if the USD rose to a resistance point, look at this old support level. This was a break. This was resistance, breakthrough candle, support, 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 breakthrough candle back down, resistance. So just technically speaking, as the dollar was climbing, if you're trading pure technical analysis and not paying attention to any fundamental news, it made sense to trade down once this movement reached this resistance level, this old support that was broken here. Okay? Had you done that, just a simple sell limit pending order, right? A simple sell limit pending order. How do you do that? For those of you who are newbies, go to market execution, switch it to pending order. Sell limit, you could have programmed to sell from a higher point. So as this was climbing, a pure technical trader would have said, hey, if it gets near this resistance, I'll sell. You could have programmed it to sell from a price up here, and it's already started dropping off that resistance. Okay? What's another reason why you might sell from that resistance level? Why you might have expected it to drop off like it did? The fear index, right? The volatility index is up 6.5%. So you would think maybe the yen as a safe haven currency might have reason to strengthen. Okay? And gold as well, for that matter. Okay, so you start to combine a little bit of fundamental news with your technical entry point, and this bounce off the resistance was predictable. Okay, it was very much predictable. And if you're scalping, you could have already taken your profit. You could already be out. A sell limit getting in at 110.05. It already dropped all the way down to 110.00. There's 5 pips. You could have shaved 5 pips profit. 20 pips a day is tremendous. If one little bounce like that off the resistance gets you 5-10 pips, great. Now, if you're a more patient trader, you could still be in on this. You actually could get in on it now if you think the yen is going to strengthen with the fear that's on the markets right now. If you feel the yen will strengthen, you could take a shot at a sell off of here, stop loss above the resistance. If it breaks through, no problem. You only risked, 4 or 5 pips, 6 pips risk for potential drop if it drops to the next support level. A logical place for those of you who are new to technical analysis, a logical place to take profit might be just before the next support level. Here's the next support level. Support, 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 support. You see it's holding and bouncing. So if you believe it'll drop, the first place you might think about taking profit is somewhere above this next support level. Okay? This is pure technical analysis thinking, even if you didn't know about the news. This would be a technical strategy. Is it guaranteed to win? Of course not. Trading's not about guarantees, it's about potential. And if you feel there's good potential for this to drop, 10 pips to risk 3 or 4 or 5, that's a scalping move. That's a scalping move. And you only need to be right 1 out of every 3, and you can profit on that type of move because your risk is relatively small compared to what could be a nice quick payout. Okay? There's a lot of volatility today because of the World Economic Forum that's going on. Okay, we saw it. Let me show you one more headline. Here, Trump's talking here at the World Economic Forum that's going on right now. It's causing all kinds of bouncing and big movements on the charts. Okay, it's not just Trump. I mean, lots of world leaders and economic people are speaking right now at this forum. And so what we're looking at then, whoops, I should be clicking on my demo. There we are. What we're looking at is, isn't there the potential for a big reversal then from what the news is now to what the news could be an hour from now? So even if you're going with a sell position here because of believing there's fear on the market because of the volatility index and believing the yen should strengthen, you still could have a buy stop pending order up here in case something crazy happens at that World Economic Forum. If someone says something unexpected, you could get a big movement and a breakthrough and a run up to the next resistance level. So a lot of times, and I say this a lot in the webinars, you don't have to be right to profit. You just have to be smart with your strategy, right? So you can try a move here with limited risk. If it pulls out, great. If it goes the wrong way and some huge news happens at this World Economic Forum that drives the US dollar up, you can have a pending buy stop ready to go right up here on the top side of the resistance. No reason why you can't do both. If you're right on one, you profit. 50% strategy in terms of all you need in order to profit on that. And if this just goes ahead and drops, fine. Your buy stop never kicks in. Okay? So that's something that looks interesting there. If we look at the pound, we'll see it also climbed against the yen. Okay, it's done really well, and it's still climbing. If we pair it against the USD, you see the same thing. Okay, this actually broke the resistance. You could do a market move on the pound if you think this momentum will continue. The resistance level is not until up here. So you might say, oh, I'm getting in late. You know what? There's a theory of riding the wave as well. And we just saw a bunch of positive economic news for the pound, as well as positive news regarding Brexit with the pound. And so this next resistance level up here isn't until 130.99, almost 131 even. So, that's another 30 pips from where it is now to the next resistance level. Okay, so that's, if you believe that momentum will continue, the technicals say it's not a bad idea because it already broke the resistance level here. Okay, now we can zoom in and look for a better entry point, 5-minute candles, and I see a breakthrough right there. It just happened. Okay, it just broke through the resistance. That's an uptrend. Okay, that's a strong uptrend that just broke the resistance level and went to a new high. So the technicals are there to believe in a potential continued climb towards the next resistance level on the GBP USD. Why might it be smarter to pair the GBP against the USD and not the yen? You have to think about strong horse, weak horse, strong horse, strong horse. You want to pair a strong horse against what might be a weaker horse. Why would the pound maybe more easily? Yeah, because the yen is strengthening as a safe haven. So why pair the pound against something that might strengthen right now? Pair it against the USD, that's not a safe haven. And so look at it climb. I mean, it's pushing up more as I'm talking. Just went up another 3 pips. Okay, so that's like a live movement there. I'm not telling you should buy on it, but the technicals make sense. Okay, looking like it has another 30 to 40 pips it could climb. Okay, and if we take a look, what's the dollar index doing? Alex, you just said the USD is weak. Look here, isn't that a sign? US markets are red. US dollar index is dropping, also in the red. Pound has every reason to strengthen. So makes sense. Pair the pound if you're going to go with the pound. Makes sense. It broke the resistance against the USD. USD has reason. You have reason to believe that it'll be weak today, and you have reason to believe the yen would be strong. So you shy away from that pairing with the pound and go towards the GBP USD. Okay. And it's not surprising that as we watch it, we see it break through further. It makes sense. We're pairing technicals with fundamental, and there it goes. Okay. If you're going to put your stop loss on this rise, there it just went to another high. Where might you put a stop loss on this? It would be below the breakthrough level, right? This was the breakthrough. So somewhere below that might be the stop loss. If it breaks back below what should be a support level now here because it broke through the resistance, that should be support. If it breaks back below it too much, then maybe the news switched. Then you decide, okay, I'm out. Okay? But that was a live movement. If you got in 5 minutes ago when we first looked at it, you're in the money. Okay, let's look at something new. How about gold? Okay, why would I say this might be an opportunistic entry point with gold? And I'm not going to tell you the direction I'm thinking. You tell me the direction and why is it opportunistic, this entry point? Why, technically speaking, is this an opportunistic entry point for gold? A lot of fear on the market, right? What direction might you expect gold to go if there's fear on the market? Up, right? You might expect gold to climb. And look, it just bounced. As we're watching it, it's bouncing off the support. Where's the support level? Here. Support, support, support. Okay? It's not exact, right? This one went a little below. This one stopped a little above. This one went right exactly to that line. Okay? So a buy off of this support just 5 minutes ago was in a great spot right on the support level. And it doesn't mean it's not an okay spot now if you think gold should climb, right? So I trust the support to hold more than I think it'll break. Why? Because the volatility index is up over 6.5%. And look, gold dropped for the last hour. Well, that's opportunistic if you believe gold should rise, okay? So where might you take profit? The first resistance level, technically speaking, is here. Resistance, resistance, resistance. You might say, well, that's not very far. That's $4 rise in gold from where it is now to the resistance, or where it was 5 minutes ago to the resistance. $4 rise. How much profit is $4 rise? This little bounce from here to here, if you had a one lot position on gold, one lot is 100 ounces. A one lot position on gold, this little bounce from here up to here, and it's halfway there already. $4 rise times 100, 4,000. Or I'm sorry, $400 in that short span. 100 times 4, $400 in what could be a very short period of time. That's called scalping the market. Your risk could have been maybe 100 to get below this support. To get down here below the support, maybe $100, $150 risk on a one lot position to make maybe 400 or 300, depending where you cut it off. $3 rise, $4 rise, okay, maybe 300, risking half that. Again, in that setup, you only need to be right once out of 2 tries, and you're either breaking even or profiting, right? Even if you don't have a winning percentage, you can have a winning profit margin. Okay, and if you believe that the fear is going to stick around today, if you're less of a scalper and more of a longer term, more patient trader, the more major resistance is up here. Okay, this was just earlier today. It was up here. Okay, that was just a while ago, all the way at 1567. If you believe it could go all the way up there, which it certainly has the potential to because it was there earlier today, how much do you make on that rise? 1553 to 1567. That's $14 potential rise to this resistance level up here. Okay, $14 on a one lot position. Now that's 1,400. Okay, some of you believe it'll go up. Then this is an opportunistic spot to trade, right? It's on a nice support level. It's bouncing. Okay, what do I always say though? You don't have to be right to profit. So what could we back this up with? Just in case the news swings. You never know when the fundamental news might change. What could we put below this support just in case? You might be all in on a buy here, a hedge, exactly, or just a stop loss and a sell stop. Could be either one. The sell stop would set up a hedge trade or a reversal of opinion if you wanted to close the original one. So what you do if you want to set up a hedge trade below the support level, okay, somewhere down here below the support, you set up a sell stop to sell. And if you believe in the buy long term more than the sell, then the sell you put a stop loss on if it comes back up above that broken support. And your buy position, you never put a stop loss on, so it has the ability to continue to rise. Okay, that's how you can hedge. If the initial move, if you took a market buy, for example, now, if that's what you believe in the bigger picture, but you acknowledge in the short term it could break the support, so you put a hedge trade below the support for the same size as your buy. If it breaks the support, it opens the sell. Now you're breaking even if it keeps dropping. The stop loss is on that sell hedge trade. If it comes back up above the support, it closes the sell, and now you're profiting in the direction that you believed in most. Never having to close, never needing or having to need to close the initial buy position if that's the one you believe in more. Okay, the benefit of that is instead of when it broke the support hitting your stop loss, closing your buy, and then it goes back up, maybe while you're not watching, now you're out of the trade. And if you really truly believe in it long term, then maybe it makes sense not to put the stop loss on the buy. Have a hedge trade down there to kick in to cover the risk in case you're dead wrong. If it keeps plunging, you're covered with the hedge. But if it goes back up and reverses back up, now it closes that hedge and you got your buy open still. Just make sure you put a second hedge trade down a little lower that doesn't have a stop loss. That way, if it comes down, hits the hedge, comes up, closes the hedge, then drops, you have another hedge trade down lower just in case. Okay? It's always smart. At least it's one idea. It's not the only way to do it, but it's a good way to do it. Any questions on that? I know we went through that concept a little bit fast, hedging. Ebert mentioned it, so I wanted to throw it in there. If anyone wants me to run through the hedge idea again, I'm happy to do it. Okay, it works best if your initial move is a market move, like if you bought on gold now, and if you believe in that direction for the longer term, so you can back it up with a hedge in the opposite direction for the short term. Okay, and you can even put take profits on the hedge, and then have a second hedge prepared in case it breaks that next support level. The next sell stop in this example would kick in. Okay. All right. It's called a trade set. And in that fashion, you actually could profit on the hedges on the way down. And then even if it just came back up halfway, you're in overall profit on the trade set, even if the initial, in this example, buy position ends up negative. Okay. All right. So let's take a look at oil. We all said oil's probably dropping. Look at that. Okay. This was so predictable today. Markets opened up a bit on after the weekend. Okay, this was the close Friday. This was the open yesterday. Okay, or I should say, yeah, this was the open Sunday night / Monday morning. So it shows the 19th for GMT time, opened Sunday night, but this is basically Monday. It gapped up from Friday's close, and then down it came, downtrend. So going into today, it already had a strong downtrend established. Okay. And for those of you that trade the fill the gap strategy, it gapped up. It immediately went into a downtrend and went lower than the gap. So on Monday, you could have traded to fill the gap, which it did. And then it bounced right there as support, right where the gap started. And then from Friday's close to Monday's open, it started a downtrend immediately. So your in point on filling the gap would be if it broke below the gap opening, which it did here. It broke below the gap opening. So that's the clue that it's trying to fill the gap. And that's exactly what it did. It came down and then found support right at the price where it gapped up from Friday's close. So that was a nice strategy with oil on Monday. And it never broke into a higher high point. So you didn't get a chance to go with the direction of the gap. Many times you go with the direction of the gap, but only if it goes to a higher high point than where it first opened, and it never did. So you could have filled the gap strategy, and then when it broke today, okay, you see here's a line where the gap was from. Today, it broke that support line from the gap. So this was Monday's support, came back and filled the gap. It was testing it today and broke it right here. So with the high volatility that we saw, right, the volatility index was up, and then it broke the support level here. Technically speaking, this was your entry point today. Right here was your entry point when it broke the support level from Monday's gap up, filling the gap, respected the support here from Friday, tested it, and today it broke that support level from the gap. This was a sure sign that there was downward momentum. So to be fair, you probably wouldn't have gotten in up here on a sell, technically speaking. The in point was here when the support level from Monday got broke, which would have been at a price of about 58.55. And right now the price is at 57.88. So you could already be about 70 cents in profit per barrel, right? Per barrel, you'd be 70 cents in profit. And this was an easy move, technical analysis wise, with the broken support from Friday's gap up, support this week, broken support. What kind of pending order would have got in on this broken support right here? What kind of pending order gets in from a broken support? If you had a pending order down here waiting for this support to get broken, boom, it breaks, sell stop. Sell stop pending order. You could add program to sell from a lower point. Here's the support, testing the support. It breaks and hits your sell stop, maybe on this line here, and you're 70 cents per barrel in profit already. Naguaco, to place the hedge, you'd put a pending order. Let's say you had a market buy on gold right now. You'd put a pending sell stop below the support level in case the whole market reverses on you. And it opens a sell position when it drops to the start price on your sell stop. Pending order. Okay. All right. So how much would you make on a one lot position on oil? How many barrels in one lot? How many barrels in one lot on oil? And by the way, I keep using one lot as an example just for a round number. You can trade whatever trade size is appropriate for your balance, quite obviously. I'm not suggesting everyone should trade one lot. Certainly not. Look how many barrels in one lot, 1,000 barrels. So this drop of 70 cents that you could have already been in on from a simple sell stop strategy, looking back at Friday's close, seeing it filled the gap and respected the support, then you looked at the volatility index and you said, ooh, oil has reason to drop. You put a pending order below the support today and boom, it breaks the support and down goes oil. How much do you make on a 70 cent drop if you had a one lot position, 1,000 barrels? 1,000 times 70 cents, right? So that's $700. $700 profit with this one little sell stop if you traded a one lot position. And hey, if you traded a 0.1 lot, $70 profit. And that's not a bad profit for a small account, right? So even the smaller trade sizes add up. If you're trading even the micro lots, 0.05, 0.02, whatever it might be, these scalping moves using technical analysis to get in and out of the market quick. That's what scalping means, to scalp profits out of the market short term. You can, if you just gain 1% on your account per day, that's 20% a month, about 20 trading days each month. That means you could, if you were gaining 1% a day, you would more than double your investment every 6 months, right? Who wouldn't take that? That would be tremendous. The potential is there with these strategies. And you can see how simple they are. We understand the direction of the market based on the quick look at the articles and the fear index and understanding there's pressure on oil to drop then. We see a support level right here, clear as day. Pending order down here, boom, it breaks and down it goes. Very simple. Okay. It reminds me of I used to play football. I'm from the U.S. originally, and I used to play football in high school, and our coach always said, use the KISS method. KISS method. What are you talking about? He says, keep it simple, stupid. KISS, keep it simple, stupid. And with many things that works really well. It worked well with football strategy, and it works well with trading. Don't try to be overly complex. Sometimes just keeping it simple with your strategy can work very, very well. Simple manual support level, simple pending sell stop, going in the direction that you think the fundamental news makes sense with a proper technical entry point, and boom, easy scalp on the market. Okay, so keeping things simple many times works very, very well. If you've ever heard the phrase paralysis by analysis, sometimes if you start throwing too many indicators on the charts and adding too many variables for when you should and shouldn't enter trades, sometimes it makes it so you just don't trade on the opportunities. You get paralyzed with waiting for too many rules. So many times keeping it simple can improve trading strategies by not over complicating things. By the way, if you're trading on gold or silver, or look at gold still bouncing off that support. If you're trading on gold or silver or any FX pairs, okay, let me show you something real quick. Those of you that I haven't shown this to, if you're new to the webinars, if you go to our main website, go to the trading platforms, okay, AvaTrade Go is the mobile app that AvaTrade created. So there are some special features on AvaTrade Go that you don't see on the standard MT4 platform login or on the MT4 mobile login. Only on AvaTrade Go do you see something like Ava Protect. Ava Protect is a feature where it protects you against losses for the time period you choose, whether it's 1 hour, 1 day, 2 days, etc. You can choose for a flat cost it'll give you that no matter how far it goes the wrong way, all those losses would be added back at the end of that covered period, or if you close a trade during that time period. And if it goes the right way, your only cost was the cost of that coverage. Okay? Protection against losses. Ava Protect. It's on the AvaTrade Go mobile app, and you can download it right there from use your mobile device to go to this web page, and it'll take you to the proper app either in Google Play or the Apple App Store, okay, to download it. And you'll see lots of nice features on it. It calculates your stop loss risk for you based on your trade size. It calculates your take profit amount for you, how much you'd make based on your take profit mark, and you'll see the Ava Protect feature in there as well, which is very, very nice. If you have any questions about that, let me know. Let's take a look at some indices maybe. The indices have tremendous movement with days like today. S&P 500 has reached a resistance level. What do you think indices do when there's a lot of fear? What typically do indices do if there's a lot of fear in the markets? Yeah, they tend to drop. Okay, does that look like an opportunistic entry point if you think the indices should drop? Resistance, 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 resistance. Now there's a more major resistance up here. Okay, you see here, support, support. This took a lot of momentum to break this support up here on the S&P 500. So it would take a lot of upward momentum to get back above. And since there's a lot of fear in the markets, you might say, why would it have so much momentum to go back above this old support level that got plowed through right here? Okay, lots of fear. This happened today, or late last night. A lot of momentum and fear broke that support and down it went. Now it's at a resistance a little bit before that, but look at it dropping. Okay, I like many times. Alex, I'm glad you're scalping gold as we speak. I hope you're profiting. So we see another opportunity for a scalp here. The S&P 500 is dropping off that first resistance level. I'm a firm believer that you should widen your strike zone with moves like this. And let me explain what I mean. You see there's one resistance level here and you have a second one here, right? So if you already did a market move here, and okay, you're in the money. If you took a market move off this resistance after I drew the line, okay, fine, you're in the money. But if it comes up and tests this resistance and spikes up here, you don't necessarily want your stop loss just above the first resistance. Where might you put your stop loss so that it's more secure? Rather than just being above this first resistance, where might I put my stop loss so that I don't get caught on a little spike before it drops on my sell? Where might I put? Yeah, above the second resistance, right? So I might put my stop loss here. Now it would take some serious momentum for me to lose my sell trade, right? It would have to go through the first resistance, which I'm trusting if I already did a market sell, and it would have to go through the more major old support level here. Support, huge momentum to break that support. I feel pretty safe with my stop loss up here that it would take some serious momentum to break this resistance and this one to hit my stop loss. And if it does, so be it. I take the small loss. But my potential profit is still twice the size. If I take a profit down here on this support, that's twice the potential profit, even compared to going through two resistance levels up to my stop loss up there. Okay? So, and you know what? You could have already scalped the profit on this one, right? It's dropped a couple points while we were talking. Maybe you wouldn't have taken a profit just yet. You got to get through the spread, right? But it certainly is bouncing the right way in the short term. And you're backed up by two resistance levels. Now, I'm not here to tell you you should sell on this, right? But obviously, we're looking at the fear on the markets. We're looking at that volatility index up over 6.5%. We're looking at gold bouncing up off the support level. All of this is confirmatory that there's still fear on the markets, and maybe that makes you believe in a certain direction on the indices. Okay? And then you connect the dots from there. It's not for me to say you should sell, but obviously the fundamental news and the technical entry points are lining up that might make sense. Okay? And there it goes, pushing down further. And if we look at the NASDAQ, we have similar setup, resistance, and it's trying to drop. It doesn't look as nice as the S&P 500, though. Honestly, this one doesn't look as nice. It had already broken this little resistance here. The S&P 500 set up nicer, which is why I showed it to you. And the Dow Jones, same thing, downtrending now. And the Dow Jones already reached this resistance, this old support here. Support, breakthrough, resistance, and down. Okay? But the S&P 500, I thought, set up more pretty with a second level resistance just a little ways up. Okay? And all that takes for technical analysis, look at a few assets that are related and take the technical entry point that's more opportunistic, right? S&P 500 set up nicer. It didn't break this resistance yet, and it had a second resistance level to protect if you were selling. Okay? So be selective. It didn't take long for me to see I like this S&P 500 better than the NASDAQ and Dow Jones right now. Not that they aren't all three going to drop, maybe, right? They tend to move in the same direction, but I like the technical entry point better. And this is a technical analysis webinar, right? There's a reason why this one bounced down already and the NASDAQ didn't yet. Wasn't at the exact resistance level like this one was. Okay? And so this is working out similar to what we would expect. I think we've looked at enough assets. Are there any questions on anything as we end the webinar? I just took a quick look at the USD JPY to see what's happening. USD is kind of moving sideways right now. It's having trouble finding direction. Nguaco, yes. Gold is what's called a safe haven asset. And when there's fear on the markets, gold tends to rise. So the fact that there's fear on the market and the volatility index was way high today and gold dropped to a support level, it was very easy to predict that it might bounce off that support. It was what we call an opportunistic entry point, technically speaking, for technical analysis. Good question. And yeah, oil Now, oil, Naguaco, good question. Oil depends on why there's fear, right? If there's fear because of economic fear, then oil tends to drop, right? Bad economy means less demand for oil. So if there's fear on the markets because of bad economic conditions, then yeah, oil tends to drop. But what happens to oil, natural gas as well, Luai? Oil, natural gas, Brent crude, they all tend to go in the same direction. Not always, but same general trends. What happens if the fear on the market is not economic? What if it's fear of war in the Middle East? Then what happens to oil? As gold goes up, oil tends to rise if it's fear about war, right? Because that can disrupt the supply. That can disrupt the supply. So when it comes to the fear index rising, before you decide which direction you prefer on oil, you better check why is the fear index rising. Is it because of bad economic conditions like today? Fear about the SARS virus causing economic concern? Or not SARS virus, but whatever this virus is that's spreading. If it's fear that's economic like today, then yeah, you're probably best riding that wave down with oil. If it's fear because Iran and the US could get into a war, well, now that could disrupt oil supply through the Strait of Hormuz, which is a major channel wave for oil to go through for many countries. So then that type of fear then would drive oil price up. So you got to check when it comes to oil, what's driving the fear. When it comes to gold, it tends to go in the direction of the fear. Listen, just because something reaches an all-time high doesn't mean it's got to come back down. Okay? Look at the breakthrough. When something reaches an all-time high, doesn't that mean it just broke the resistance? And if something just broke through the resistance, doesn't that mean it has upward momentum? Right? So be careful thinking just because something reached an all-time high that it has to come back. Now, if it hasn't broken the all-time high yet, then you can get a pullback, technically speaking. But if it breaks through the all-time high to a new high, now you've got a breakthrough. So technically speaking, you'd go with it, not against it. So it depends on the location, if it broke the resistance yet or not. Good question. Okay, everybody, thank you for attending. If you have the time, we have another session going tomorrow a little earlier in the day, 10:30 a.m. GMT. But keep in mind, all of these webinars are recorded and they're on our YouTube channel. All of the webinars are on the AvaTrade YouTube channel. If you miss it live, you can catch it later the same day for the early sessions or the next day for Monday evening's session. They're posted on our YouTube channel. You can catch it and see what we talked about. All right, great. Thank you, everybody, for attending. Good luck with your trading today. Lots of movement probably still to go today. Good luck. Bye for now.